The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 8:30 a.m. Tuesday morning, coming into the holiday week. We got 3 more days of trading, folks. Then we're coming in closed for Friday for January 1st, 2021. The market's continuing the upward trend. We're about 6 points off the highs we got overnight in the S&Ps, reaching a level of 37.4775 to be exact at about 3:45 a.m. this morning. We've pulled back slightly. You still have the S&Ps up about 13 points at 37.41. NASDAQ 100 up 55 points, 12,887. The Dow up an additional 126 points. The futures actually climbing above 30,502 at one point. The Russell positive by 2 points as well. The Russell pulled back pretty considerably yesterday. You see the high of 2,032. We dipped down towards the end of the day at about 1992. So you're talking about a full 2% that we just give back in the Russell, basically from 8 a.m. until 4 p.m. Eastern time, and we're right at that level right now at 1997. Got to check in on Bitcoin. $27,075, $35 off for the session, holding at that 27,000 mark. Volatility persisting. Last night at about midnight, we were down at almost 26,000. $1,000 moves becoming the norm for Bitcoin. Crude oil catching a bit at $48.18. We got the gold contract this morning up about $3 at $18.84. Silver down 17 cents at 26.36. Notes and bonds, a little bit of lower price, higher yield. The 10-year yield, I believe, sitting at about 0.94% right now. The 10-year is negative 2 ticks at 137.27, and the 30-year is negative 13 ticks right now at 172.11. We'll jump over to the Vix Volatility Index. We got a 21.15 low yesterday, sitting pretty relatively low, all things considered, folks. You put it on a daily, you want to see the highs and lows of where we've been. Excuse me, we were down at 1951, the low, back in late November. We spiked to a high, and that was last Monday on the UK strain. That was the high there. And then just like that, we're back down to about 21.54. The $20 area seems to be the low this market is comfortable with in a post-COVID reality. How that affects things when the market begins to open back up, we will all see. Jumping around to the other stories here, what's going on? I'm going to jump to the 737 MAX. So American, they're set to begin flying that airplane today, I believe. American set to be the first airline to return the planes to commercial service in the U.S. since they were grounded. Pretty remarkable. We're now talking about almost 2 full years. March of 2019, those planes were grounded after the 2 crashes. United and Southwest plan to fly the plane again in the first half of the upcoming 2021. They're returning to travel. Mark, devastated by coronavirus, to put it lightly. American Airlines Flight 718 scheduled to depart Miami International Airport at 10:30 a.m. for New York's LaGuardia. Boeing, quite the roller coaster this stock has been on. Prior to COVID, we're going to back it up a couple years here. 3-year weekly, so you can really see the demise begin in terms of, as they just mentioned, this was grounded in March of 2019. This is a weekly chart we're looking at. There is kind of your March and April price area of 380. And you really see, I mean, you know, prior to COVID, Boeing was going to get over this and they weren't going to pay a too substantial price, as in, I mean, yeah, you might have traded it off 30% or so from 446 to almost 300 in late January. But then you fall from 350 down to 89, right? We've clawed back to 216. We were just at 150. You're going to get a little bit of a pop today on that news, but everybody knew it was coming. But that will go into the skies. Pretty remarkable that they never decided to rename this plane. I would have bet a decent amount of money on a risk-reward basis that at some point throughout the last year and a half that they would choose to rename it, but maybe it was just too prevalent in the press that was actually going to be too much of a gamble that came with maybe some negative connotations, as in you're renaming it. What are you hiding, right? Maybe they just realized it was too much and they're going to go with the 737 MAX. They're going to get it in the air. They're going to be safe. And Boeing's up a little bit this morning. All right, jumping around to other stories we have out there. So you have the House last night voting to pass a bill for the $2,000 stimulus checks. Interesting, the politics in play and how this could affect the markets, because you have that now going to the Senate, controlled by the GOP. I believe they need like a unanimous number in the Senate in order to be able to pass that in time. And we'll see how that happens. The greater interesting fact is that you then have the Georgia Senate runoff. 2 Senate seats there, control of the Senate at stake, how this plays into that, how the president plays into all of it, and how the Senate gets made up. We're going to find out pretty soon, a week from today, I believe it is, January 5th, that they vote in Georgia, and we'll find the makeup there. China, keeping the focus on China. You have the Trump administration bolstering an order barring U.S. investment in Chinese firms. So yesterday, the Trump administration strengthened an executive order barring U.S. investors from buying securities of alleged Chinese military-controlled companies following disagreement among U.S. agencies about how tough to make the directive. State Department and Department of Defense had pushed back against a bid by the Treasury Department to water down the executive order. So Treasury Department trying to water things down. Mnuchin over there. State Department and Department of Defense saying not so much. Nonetheless, the Trump administration on Monday puts out an executive order, and that's going to persist even with the upcoming Biden administration. China, it's going to be interesting to see how that all plays out. You have President-elect Biden saying that he's not going to initially take off any of the tariffs, et cetera. They'll remain as he comes in, and we'll see how that shakes out. And financial. Do I have it up here? Here we go. So the Baba and Ant Group saga continues to play out. China's central bank says Ant Group set to be financial holding firm. So China's central bank said Alibaba's fintech affiliate Ant Group is drafting a plan to set up a financial holding firm. The company should ensure that all its financial operations under regulatory supervision. So what this really has to do with is that they're going to have greater capital requirements than they may have previously because they'll be under a bank. But as a result of the holding company, they may not have to sell off all the areas of their business that they anticipated might be possible when the news broke over the weekend that China's central bank wanted them to be more like a bank. And what you're going to see is there's a little bit of a pop. It's up $8 this morning on that news to $2.30. You were down to $2.11 last week. You were up at about $2.60 before the recent saga began, but you backed things up and you were up to $3.20 before the Ant Group IPO fell apart, and I believe that was going back to about November 2nd. There's the devastation there. You go to 280, and just like that, we're down to 210. Some good news potentially, but if you're in that stock, you're just basically at the whim of the Chinese government. And, you know, that's a variable. We're all dealing with variables that we try and quantify the risk of. That's one variable that you have to deal with, and doesn't mean you can't make money, but it's a variable that I'm not quite sure I can quantify in my own head. All right, jumping to the VIX again this morning. We get the VIX on a 15-minute. We're giving up a little bit. You see, we were down to about 2030 as the market's giving back a few points. We're up to 2154. The S&Ps right now is up to 3747. We've given back about 6 points. We'll check in on Tesla this morning. Remarkable how well this stock has held up after they were added to the S&P. There's your high print of 695. And, I mean, you take this one day out of rotation, folks, the biggest day out there. And Tesla was trading at all-time highs yesterday, 663. Stay tuned, folks. We'll be right back after the break, see what else we have going on Tuesday trading. Coming into year 2021. We'll be right back.
Hi, folks. This is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins, too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. S&P is positive by 13. I got a chart here of a daily of the S&P. We're going back 1 year. There's the start of the year. The futures close out 2019 at a price point of 32.36. Right now, folks, we sit 505 points positive for the year in the S&P. Remarkable. It's like 16%, somewhere in that. I believe you have the Dow up somewhere around 6 to 7% right now for the year, and you have the NASDAQ up a staggering 45%, somewhere in that area. And I'm just going to delete this because we're going to talk about it. Remarkable, right? When you look at where we are even for the year, right away in January, this area becomes an area of support. We bounce in February. We cascade directly through that number. By the time we make it back to break even for the year, pretty amazing that we make it back to that area by June 9th. Not a coincidence, folks, that anybody that says, my goodness, I'm even for the year at 32.31, we actually made it within 5 points, right? 32.31, and what happens? Maybe there's some selling, and we go from 32.31 down to a low of 300 points below there to 29.32. You see we chop around that area again in July. We trade up, and look at these two bounces we got, September 24th or so, and then again on October 30th. Right? Just something to keep your eye on, folks. Technical analysis, it doesn't have to get too difficult sometimes. You know, you see this line, you see it bounce, areas of support become areas of resistance. It doesn't get much cleaner than that in terms of a break-even number for a year like 2020. Of course, that's going to have some significance when in reality, it's just a number like any other number, right? But we're humans. Humans have a tendency to be human. And breaking even for a year like 2020, that's something that continually, whether it was early in the year, whether it was on the first bounce in June, or whether it was where we were bouncing as we came down in September, and in early November. Just pretty cool to check out on that chart as I was putting that together for one of my newsletters this week. All right, jumping around to what else we got going on. Some of the companies moving this morning. SAP, so Qualtrics. Their unit is going to go public, specializes in customer relationship software, expected to be valued at $12 billion or more compared to the $8 billion paid in acquiring Qualtrics 4 years ago. How about that for a 50% return over 2 years? And that's at least. When this thing goes public, if it's going valued at $12 billion, we'll see where those shares trade once they go public. SAP, I believe it's just SAP, right? There it is. And we're going to zoom in on them. They're up a little bit this morning. I believe they got a run yesterday. Yes, they sure did on that news. We were just trading at about 126 up to 131. Strong time for IPOs. You wouldn't imagine it in March, but they're all coming out in December with the market near all-time highs. We talked about Boeing. They get the 737 MAX back in the air at 10:30 a.m. this morning, I believe. Cisco is pulling the plug on its quote-unquote smart cities project. Project, part of an effort to expand Cisco beyond its traditional networking equipment and hardware into a more lucrative software services business. That is not panning out, though. Cisco shares, pretty marginal. You put this on a daily, talk about a roller coaster, right? From 50 to 32 to 48 to 35 to 45. Cisco trying to find where they end up. The 3-year weekly still kind of struggling for this equity. You see why they might be trying to find a foothold in an industry currently beyond what they're in right now. Going down the line, Target, they sold its Durham store operation to a UK-based online retailer, THG, for $350 million in cash. Pretty small number when you think about the size of the company Target is. Target shares 176, one of the strongest companies to rebound during all of this, from $90 to a complete double bagger up to 181.17. You're sitting at 176. While we're on Target, let's take a look at Walmart. Walmart shares at 145. You were up to 153. This acceleration here having to do with the details of the Walmart Plus, their service. I believe it's like $98 a month, a year, $99 a year, something like that, to compete with Amazon Prime. Free delivery for $35 orders or more, Walmart. And then two of the others that always jump to. You got Lowe's. I just got a Fibonacci number on here. But Lowe's up to 180, sitting at 160. These are strong companies, folks. When you see these companies, they're going to maybe consolidate for a while. One of the things I talk about in my newsletter all the time, if you're looking to get into one of these equities, right, the way I try and think about an equity like this, Home Depot, for instance, housing market's been on fire. Home improvement has been on fire for just people staying at home. Doesn't mean that that's going to change. I mean, I think we've seen all of this. Home offices, just your home environment in general, whether people go back to working 1 to 2 to 3 times a week, you're going to be spending a lot more time at home in general. So maybe you see a period of consolidation like we're seeing. I mean, we've been consolidating basically for 5 months in Home Depot from 260 to maybe 285, 290 area. Okay. Now, if you want to get into this equity, this selling cash secured puts or some of those strategies, it might be a great opportunity as we see some of these high flyers have to consolidate for a while in this area. You sell some cash secured puts below the market. If it consolidates, you collect the premium. If it happens to dip below that level, you get an entry below the market. And realistically, I mean, Home Depot was trading prior to COVID at a level of 247. You can't tell me that a company like that is not better off right now in terms of the development of homes, the housing market, and people spending more money. And meanwhile, you're only up about $20 from where you were prior to all the work from home, from all of that stuff. So yeah, I imagine that's got a success story in the future. And same thing with Lowe's. I mean, I'd imagine you might actually be even a little bit higher with everything going on. Yeah, you went to $60 and you went to 180, but you look at where we were at the beginning of the year, you had about 122. We're up 33% for the year. Nothing to shake your head at. But man, the world's changed a lot since the beginning of this year, and people are going to be spending a lot more time at home in general in the years to come when you're able to work from home, etc. Zoom, really on my radar. I mean, check out this, right? I was talking about this in my newsletter yesterday. We've pulled back to the entire area of where we started in terms of September. The gap would be at about 325. The high there, to get it exactly, you're talking about 325.90. To fill that gap seems like it might be possible. But again, this is a company that's benefited tremendously from the work from home. Definitely got ahead of itself, obviously, from where we are now up to the 600 area. But that's something that, you know, if you want to get a position on Zoom, same thing. You could either scale in once you've had this type of a pullback, because there's no saying this might stop, but geez, you're getting it at, you're talking about a 40% haircut from where we were trading at October 19th. Keeping in mind, we go to 366 in November. We're up to almost 500 by November, and we're back to 350 by the end of December. So volatility for sure, but something to keep your eye on some of these equities as we get some pretty substantial pullbacks. Zoom is a strong company. They make money. They are going to be around in a big way. One thing I mentioned in my newsletter yesterday, I said, when companies start to get to the area that the name of their company becomes a commonly accepted verb in the English language, that's a company I keep my eye on, folks. As in, you Google something, hey, do you guys want to Zoom? Right? You're using it as a verb. You're using their company name as a verb. And people know what you're talking about when you say that. So I see a future for that company, something to keep your eye on. All right, let's check back in on some of the FANG stocks as we speak. Google shares, they're going to be up a bit this morning, up about $5 from $17.76. We got Microsoft shares right now up a bit as well. You get the NASDAQ 100 up about 60 points. Amazon had quite a day yesterday and continuing that trend up to $33.12. You were at $31.80 yesterday. We're talking about $130 in this equity in less than 24 hours. For some context on Amazon, all-time highs, still got some ways to go, 35.52. But Amazon as well, consolidating basically since July 1st. Stay tuned, folks. We're right back to finish up the show.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're going to jump to the dollar. I got the dollar index spot up there, the Bloomberg 90.02. Interesting article over here talking about traders boosting bets against dollar to highest in almost a decade. Speculator short positions hit highest since March of 2011. Of course, you got to look at the Fed policy, the deficit as seen weighing on the greenback. We got a lot of stimulus. They're pumping cash into this market. The dollar's been sliding. As a result, speculative traders ending the year doubling down on the bets against the dollar. Net short non-commercial positions in futures linked to the ICE U.S. dollar index. It's a lot to get out, but there you go. Have surged the most since March of 2011, according to the latest Commodity Futures Trading Commission data. The gauge of the U.S. currency has fallen over 6% this year. Investors turned against the greenback amid unprecedented, that's for sure, monetary easing from the Federal Reserve and a move away from haven assets. So net speculative bearish bets on the U.S. dollar index at the most since 2011. And there's the chart, folks. You're looking at it. And this is the dollar index here on the top. And this is the net non-commercial positions here on the bottom. And you see the dip to negative territory. That's the most since 2011. We'll see how the dollar index plays out. Currencies playing a big factor when you look at either it's, crude. I mean, look at this decisive break in crude above this huge consolidation we had here. You check out gold. We're sitting at 1884 right now. We did dip to 1800. Quite the run from 1450 up to all the way to 2089, and even back it up to really November 30th. You were down at a low there of 1767. We're almost $120 above that price level, but we're coming into this consolidation. You might face a little resistance around this 1900 price point in that gold contract. S&P's up 15 points. We're going to open at all-time highs across the board, folks. There's your daily in the S&P's, all-time highs. There's your daily in the NASDAQ 100, 12,891, up about 0.4%. Throw in the Dow there, 30,436, quite the uptrend channel. We got the Dow hanging in, and the Russell. All-time highs yesterday, not quite there yet this morning. Stay tuned, folks. We got our man Larry Pesavento. It's coming up live next with Trade What You See. Live programming all day at TFNN. Right back, folks.